Good afternoon. This is Tom Asper with the Viper Report. It's Sunday, April 12th. Happy Easter to everyone, and hopefully, will be the strangest Easter any of us ever spend again. But it's been a very strange few weeks, and hope some of you have been following me on Twitter. I haven't done as many videos as I hope because I've been writing daily updates for my subscribers. We did another 4 last week for both stock and ETF traders, and as well as I've been doing a number of Forbes articles. This one was from a week ago, what to expect from bear market rallies. Many of you have not experienced a bear market. So this article kind of takes you through what past bear markets look like and makes you aware that in bear markets it's typical to see very sharp rallies. I added this series this morning. I'll show you the link to that later. Is that what happens for a bear market rally, which was the case in the spring of 2008, is they go far enough and last long enough to change people's opinions till they think it's not in a bear market, and then the market will drop again. Unfortunately, I think that is the likely scenario now, even though last week's rally was the best in 45 years. In last week's market analysis, is this bear market rally over? I pointed out that really the selling the prior Friday was really not that strong. That was the 3rd of April. And that to me made the early morning action on Monday quite important. If the market was higher, then the rally was going to go further. And that's sort of what we're looking for tomorrow. We don't see any signs yet the bear market rally is over, but we think it will end. And some of the gains last week were head scratching, to say the least. I talked to a number of professional traders, individual traders, those who have mutual funds and 401ks, and pretty much in any of those people, no one's looking to take a cruise in the next year or two at the earliest. Yet some of the cruise companies were up 30-40% for the week. So that's tough to put your arms around, but that's typical of a bear market rally. What I am watching at as the key Fibonacci retracement level. So when you see a decline like this in the S&P 500, we got down. This was as of the 3rd of April, so it didn't have last week's action. We moved well above the 38% and exceeded the 50% level here at 277.68. So if we can close above 291.70, that will suggest a change in trend. That's the key level I'm watching the S&P. The broader the market average, the more important the level. If you look at the QQQs, it's been stronger. It's moved well above the 50% level, but still has that 61.8 level at 209.76. As of the start of the week, you can see the on-balance volume and the AD lines were not that strong. They've improved. All are now positive, and they've moved slightly in terms of the NASDAQ 100 above this high. So typically it's going to take a day or two of heavy selling to reverse that. As I pointed out, this is my Forbes page. So if Forbes.com cites Tom Asbury or search Forbes.com, you'll get a whole list. And this is the one I posted this morning, Why Do Bear Market Rallies Occur? And it looks at the sentiment picture and how you can gauge what they look like. I'll give the links to these articles in the email, Anatomy of a Bear Market Rally. At this point, I think there's more risk being in the market than not in the market. Nevertheless, we're still making reservations. We have some ETF positions, and we find a number of stocks that look pretty good. The main thing is the risk versus the reward. If an ETF is up, 10% for the week, buying it up 10%, has a risk basically of 10% to probably the week's lows. That's unacceptable from my standpoint. I deal on probabilities, and I look for high probability situations. And there are not a lot of those in ETFs. There are more of those in individual stocks, because some of them correct when the market goes up, and all stocks do not move together. So, those are the ones I'm looking for right now. I'll try to do another video update later in the week. But as I said before, please follow me on Twitter for market commentary. That comes pretty regularly, at least once or twice a day. If you're interested in specific investment advice, then you can go to theviperreport.com and click on Viper Report or Viper Hot Stocks. sign up for 1 month, $34.95 gives you 2 reports, or for the last 3 weeks you've been getting a report a day, with market commentary and specific recommendations, both on the long or the short side of the market, as well as keeping you in tune to what's going on in some of the economic indicators that I follow. Well, I hope you all had a great Easter weekend, and we're looking forward to better times ahead. And most importantly, we don't know what the economic toll is going to be for this, but hopefully the human toll will get better, not worse. Take care. Thank you.